Section 50010 of the California Health and Safety Code reads, "There is an urgent and continuing need to provide affordable housing to meet the increasingly unfulfilled housing needs of this state." That was written 50 years ago. That it could have been written today is why the California Housing Finance Agency continues its mission. In 1974, 3 state legislators, George Zenovich, George Moscone, and Pete Chacon, worked to engineer a bill that would create a housing finance agency. Their bill passed both houses, but was vetoed by Governor Reagan. In 1975, however, the new governor, Jerry Brown, recognized the true need for affordable housing. He proclaimed the first extraordinary session of the legislature on February 17th, barely a month into office. Brown signed AB 1X, known as the Zenovich-Moscone-Chacon Housing and Home Finance Act of 1975, into law on June 27th. 91 days later, on September 26th, the California Housing Finance Agency was born. There were a novel's worth of twists and turns behind the agency's founding. You can even read about it in Michael Bevier's book Politics Backstage, a fascinating look behind the scenes. Once CalHFA moved into its first office at 300 Capitol Mall, things moved quickly. It took less than 2 years to make the first single-family loan. In January of 1977, Jose and Carmelita de la Cruz moved with their family into a modest home in San Jose. The average CalHFA home loan that year was just a hair over $31,000. CalHFA also began issuing its own mortgage insurance and put together its first multifamily deal, financing Woodbridge Village Senior Housing in St. Helena in January of 1978. During its second decade, CalHFA launched socially conscious initiatives like the Self-Help Builder Assistance Program, offering very low interest rates to low-income individuals if they built most of the home themselves. The Affordable Housing Partnership Program promoted collaboration with city and county down payment programs, showcasing the effectiveness of financial layering. Between 1996 and 2005, the agency introduced 11 new programs and rebranded as CalHFA. With the passage of Propositions 46 and 1C, it secured new significant funding, expanding support for teachers, people with disabilities, and special housing projects. Annual single-family lending reached $1 billion, and multifamily lending also grew, with CalHFA overseeing hundreds of affordable developments through its asset management division. In 2006 and 2007, housing prices soared, and CalHFA was able to offer competitive loan products, with the average loan amount reaching $266,000 in 2007. When the housing market collapsed at the end of the 2000s, CalHFA faced challenges like other lenders, but remained financially prudent despite having a full fiscal year when we closed 0 first mortgage loans. We were, however, able to support struggling borrowers through loan modifications and portfolio restructuring, and Keep Your Home California helped reduce the crash's impact by providing $2 billion in relief. CalHFA got fully back into the first mortgage market in 2013 with the Cal Plus suite of mortgage products. Through the crisis, CalHFA also administered funding for the Mental Health Services Act housing program, which provided support to help thousands of Californians experiencing homelessness or in danger of experiencing homelessness, including veterans with mental health issues, find a safe, supportive, and permanent place to live. Our 5th decade brought new heights and new challenges. We set single-family lending annual records for number of first mortgage loans and dollar volume, and multifamily lending records for dollar volume and number of units financed. We were also entrusted with billions of dollars from other state and federal funding sources to administer programs for California. The National Mortgage Settlement Housing Counseling Program provides free housing counseling to Californians who need help purchasing a home or preventing foreclosure. California Mortgage Relief and the Cal Assist Mortgage Fund make mortgage payments for people suffering from hardship through COVID and recent disasters. The ADU grant program funded up to $40,000 for people building accessory dwelling units on their properties, and the California Dream for All Shared Appreciation Loan, which helps first-generation homebuyers with a large down payment loan. The future holds a lot of promise for CalHFA. The agency has a strong, stable financial base due to the assertive actions by the Finance Division, which recently achieved the highest credit ratings in the agency's history. Single-family mortgage loan offerings are competitive and appeal to a wide market base of first-time homebuyers across the state. The multifamily division has supported affordable housing primarily through the award-winning Mixed Income program in recent years. And it continues to embrace flexibility and innovation by launching a bond recycling program that maximizes the limited resource and exploring the possibilities of local partnerships and preservation programs. As of 2025, CalHFA has helped more than 230,000 Californians purchase their first home, and we've invested in more than 85,000 rental units so low and moderate income families can find or stay in a decent, affordable apartment. CalHFA is committed to continuing its legacy of promoting and preserving affordable housing by investing in diverse communities with financing programs so more Californians have a place to call home. And we look forward to the next 50 years.